when I first came to India to take up this job, although the first piece of analysis that we did, my team and I did, we actually raised this twin balance sheet challenge as a, identifying it as a twin balance sheet problem and so on. But to be completely honest, I did not think at that stage, while I knew this was a big challenge, I also thought perhaps if interest rates could come down and growth could pick up, maybe some of the problems would kind of become less bad. But so in that sense, I'm also a little bit guilty of this. Something magical will happen, but it's not turned out to be that way. So what have been now? So we spoke about the run up to this twin balance sheet problem. We've also said that the consequences have been slightly different than other countries. But the question is whether, the way we've handled it in terms of giving time to time, evergreening, etc., where is it sustainable, or, do we need to address this a bit more seriously? Yeah? And so it's turning out that, the problems have been getting more serious. So this is a comparison of the return on assets of banks, what's happened to private banks, SBI, public sector banks, and generally here an international norm is that if a bank earns 1.5% in terms of return on assets, that's respectable. Basically, Indian banks, apart from some of the private sector banks, are so the health of the banks in the long run is not in great shape. And then of course we see more recently. So here's the thing, right? So you say we had this twin balance sheet challenge. We didn't suffer the worst consequences. We were different. But now you could make the case that the twin balance sheet challenge itself is having an impact on many of these things. So for example, you see the latest data on fixed capital formation. Actually, this is not updated again because I think the latest number is not minus 2%. Is this updated? Oh, okay, good. Okay, it's updated, right? Yeah, okay, it's updated. So you see that real growth in fixed capital formation is now in negative territory, real capital formation growth, and that is what is keeping investment down. We see that credit to industry, you see that has been declining very sharply. And now one point I should tell you is that now here's something is again an exercise for students and for all of you to think about here. That in some ways you could argue that this exaggerates the problem because, and this is again a point that a different version of the question that you raised, now it's possible that banks may not be lending to industry, but it could be that the firms are getting money from other sources. So for example, what are the other sources? They could be raising money directly through the bond market, and that's happening to some extent. They could be getting money, they could be borrowing more ECBs, foreign borrowing. That could be happening. They could be borrowing more from abroad. And of course, they could also be borrowing from other parts of the economy, like commercial paper, etc. Insurance, pension, all those things. So one interesting thing which we've done already, actually, which we've done, not showing it to you, that if you look at overall financing to industry, it looks a little bit better, but it's also not, but it's also the general direction is the same. The other interesting point here, again as a pedagogical device, is relates to a question that you raised. You should, if you do this with and without Uday, it's very different because Uday contaminates this to some extent because Uday is also part of this. So borrowing by the discoms is also part of this, and that changes the picture again to some extent. So again as a pedagogical device, industry credit, the bank borrowing is declining, but is it declining from all sources put together? And that's a useful thing to do. But in this case, we find that in fact the numbers, at least the broad trend, is very similar. Now, also, if you look at MSMEs, of course, they are also facing the squeeze to a great extent. But again, with the MSMEs, one thing is that they could be borrowing more from NBFCs or from other schemes. So it's something that is worth checking whether they are doing as badly or not. And finally, of course, how does the twin balance sheet itself affect all this? We showed you yesterday that the transmission mechanism has been impeded because if the bank's situation is not very good, they don't generally pass on cuts in rates because they want to maintain healthy profit margins to make their balance sheets look better. And so the twin balance sheet challenge itself affects investment and credit and growth, and this is an example of that. So here's the kind of interesting, so what I love as pedagogical devices is compare and contrast. What is different, what's similar, and why is that the case? So Japan, see, in one sense, this Indian thing is similar to Japan, is the following. High NPAs, it's taking a lot of time, like in Japan. And in Japan, maybe, do we have the chart, Rangida, after this? Okay. If you see what happened, Japan, the crisis happened in the early 90s. Japan is growing very rapidly, and for a very long time, for about 20 years almost, Japan's growth rate has been 1.5%. So it's not been a crisis, but very slow growth for a very long period of time. Now, the Indian case is similar but different. It's similar in that it has also slowed down. It's not collapsed, but the levels of that growth are very high in India compared to Japan, and that's the similarity with Japan. But what is different is that we have robust growth, and in all these countries, in the US and in Japan afterwards, basically they had deflation, and because they had deflation, using monetary policy to revive the economy became very difficult, and in that sense, India has been a little bit different. So you're almost, in these cases, you're almost blessed with higher inflation than other countries that have deflation because they cannot respond to this by using monetary policy. The other difference is that India and Japan are similar in that, and China, in that the borrowing happened by private firms. In the case of the United States, the borrowing happened by households mostly to borrow and buy properties. But of course, the difference between the United States, Japan and India have taken a lot of time to resolve this. The US did it very, very quickly. Now, I cannot ignore the China question. What is China doing? Now, in China, what is happening is very interesting. China has had very, very rapid growth, and the growth has started to decline, right? Now it's about 6.5%, from about a peak of 11, 12 is down to 6.5%. Now, in the case of China, a lot of the borrowing, it's not just that the lending is public sector banks, but a lot of the borrowing is by state-owned enterprises. That's one difference with India. And many of these state-owned enterprises are steel, et cetera, right? So China faces the following dilemma. Politically, it seems it's very difficult for China and the political leadership to accept growth rates below a certain amount. So at one point, they said the politically acceptable growth rate was 7.5, now it's come down to 7, now 6, 6.5, we don't know. So in order to prop up growth, they have consistently used stimulus policies to prop up the growth. And the more stimulus you do, the credit only expands. So China has caught in this classic dilemma of, to address the problem, you have to shrink this credit. You have to, lots of, for example, in steel, there's a lot of overcapacity, huge amounts, right? It has to cut that. It's beginning to do that. But cutting capacity in steel means laying off lots of workers. So it's true of India, it's true of China. In order to address these things, there has to be social disruption because, basically, unsustainable things were done. You have to correct that. So China is caught in this dilemma. To address it, you need to take some tough political decisions like India does. So the easier thing to do is to stimulate, keep up pumping and stimulating the economy, but that only increases the magnitude of the problem and postpones the problem. But in some ways, China has also started taking action. It's trying to revive what it did, for example, in the early 2000s. It is, in the steel sector, it is trying to reduce capacity. I mean, they made a public thing. And there are moves afoot to try and see how these banks can be cleaned up. But in a sense, they're stuck in a very similar situation to that of India. But one difference is that they have much higher levels of credit and non-performing assets, and most of the big doubtful borrowers are state-owned enterprises, whereas in India, it's private sector enterprises. Now, I'm going to tell you, is that good or bad? I'm going to come to in just a second. Huh?
If you look at the NASSCOM reports, they mentioned that at least 100 MNCs have been setting shop in India per year, at least 100 over the past 10 years. So how do you think that the competition with these MNCs of the local firms, in terms of competing for resources, could have contributed to the corporate stress?
Certainly in the IT sector, the IT sector is not a big part of this problem, right? Just to give you a sense of
this is across all sectors,
yeah.
the MNCs that they have counted.
Yeah, but I think, infrastructure, there are no MNCs in India doing infrastructure at all. So the big problem sectors or challenge sectors in India are power, steel, clothing and textiles, and then the rest of it is dispersed. But these are the big. Now, the question is, I'll come to the interesting question about the telecom sector. That's very interesting as well. There you have something like what you just said, i.e., if you get more competition. In the case of telecom, we've had a new entrant into the market, and that actually, because of various factors, could affect the profitability of the other players. So in that sense, in that sector, the kind of point you were making could be applicable, although it doesn't apply to the other sectors. In steel and infrastructure, it's no competition from MNCs. So the government has done a series of things, and the RBI, beginning in June 2014, the previous governor, took a series of actions. I don't want to go into all the details. It's all very, very technical and so on. But essentially, one thing I would point out, the AQR, the asset quality, keep that in mind. I'm going to say something on that. And of course, most recently, the government passed an ordinance which has given the RBI more power to address this twin balance sheet problem. And today's newspaper, the headline you may have seen in Business Standard. I don't know whether you looked at the top half of the paper or the bottom half. I think the bottom half was much better because it spoke about all of you, the IIT Delhi course that I'm doing. But more important, the top half has the finance minister talking about what's happening on this. So I would much rather you read the second half of the paper, but the first half has this as well. We will see what's going to happen in that. Now I want to come to what is difficult. Why has it taken so long, and what is the heart of the problem here? And it relates to the distinction also I made between who's borrowing in China and who's borrowing in India. I think that at the heart of it, it is, core problems, it's not just about the banks, it's about companies, it's a twin balance sheet problem. It's an economic problem, not a morality play. Essentially that, think of it this way. When we read the newspapers, we tend to think that a lot of it was because of cronyism and corruption, and all the headline cases are like that. But I think it's fair to say that we don't know what the proportions are. We also know that some portion of the problem was also because many people made bad investment decisions. They were not bad in an ethical or moral sense, it's not could have been, but you just thought, oh, growth is happening, it'll continue. So bad investment decisions need to be kept apart from, unethical business decisions. And I think part of the challenge in a political system like ours is how do you, separate out the two, because the two of them have very different responses. If it's because of cronyism and because promoters never put in any equity, then of course it's one solution. But if it's just honest mistakes, you should have another solution. As someone said quite rightly, this stressed debt is heavily concentrated in large companies. And so that's both easy in one sense. It's easy in one sense because, you can actually say it's not about millions and millions of loans. It's maybe about 100 loans, and you can do that. But if it's with private companies, and a few private companies, that creates a huge set of political challenges as well. Now, what is that challenge? Many of these companies are unviable at current levels of debt, requiring debt write-downs. So the heart of the problem is a political problem. So I'm going to I may not show you this, maybe I might show you the chart. So for example, if you take the power sector, because energy prices have come crashing down, and we'll do that, a lot of the capacity that was built is simply unviable at current market prices. So you have to have a lot of, even in the steel sector, you may have to have a lot of write-downs in order to salvage some of these assets. So essentially, it may require writing down debt. And that comes to the heart of the political problem. How do you, as a political system, be seen to be writing down debt which favors some private companies? Now, that's the heart of the problem. It's not, no political system finds it easy to do that. And that's why it's interesting, the contrast with China. I mean, if you also own the guy who's borrowed, maybe it may be easier, because it's all in the public sector. But here, you have to be seen to be writing down debts to the private sector. So, so anytime that happens, people will legitimately ask, how do we know this is yet another instance of favoritism and cronyism and corruption? And there's just no way. I think even sophisticated political systems find it very difficult to, make this distinction. And in India, it's very, very difficult. It's very difficult for a number of reasons. We have, the whole CBI, CVC. So any bank managers are very, very reluctant to do this. And so in that sense, banks have been finding it very difficult to resolve these cases despite, and that's what's been happening. So what the government is now trying to do, and what the RBI is trying to do, is to see whether we can find a mechanism whereby there's some way of, getting debts to be written down, maybe penalizing the promoter if necessary, and then making these companies, so that essentially you're trying to salvage the assets that are there. Some assets probably cannot be salvaged, some will have to be written off, and some can be salvaged. Then the question is, when you salvage it, will the existing promoter run the company, or should we get a new promoter to run the company? That's another question that will have to be addressed. But I just want you to keep one thing in mind. See, people say, for example, to solve this problem, okay, let me come to that in a second. So, and delay is costly, so we have to do it quickly. We know this. And in the economic survey, we came up with the finance minister mentioned it that day. He said, I argue with Arvind every day about UBI and about bad banks. And so this is this is a proposal we made in the economic survey. But I think that so just to step back, and if you read this year's survey, you'll see this. If you step back from all of this, essentially there are 4, I think, R's that are required to make progress on this. Recognition that essentially let's come clear on what is the magnitude of the problem. I asked you to hold the thought about December 15 AQR. Raghuram Rajan in December 15 said, we need to have an asset quality review that is forcing all the banks to come clean about how much non-performing assets they really have. And if you see since then, the total, because assets can be non-performing or stressed, yeah? The total of the two may not necessarily have come down, but certainly a lot more of what they called stressed have now been recognized as non-performing assets. And so in that sense, I think we've made a lot of progress on recognition. I think we have a better sense, but it's possible that we still don't know the true amount of the stressed assets. Some private sector companies think, like Credit Suisse, that in the public sector banks, the stressed assets could be as high as 20%. That's their estimate. But we have to constantly monitor this to see whether we've actually come to grips with the scale of the problem. But I think we made a lot of progress on recognition. The second and third are where we are today: resolution and recapitalization. Now, here's the thought that I wanted to introduce now. People think that, oh my God, the government has to put in a lot of money into the banks in order to recapitalize them, to bring them up to levels that is considered safe and prudent. Now, but if you think about this, if underlying assets are bad, if, let's say you have 100 rupees worth of assets, supposing bad decisions were made and those 100 rupees are only worth 50 today, supposing, just an example. The point is that the remaining 50 of loss is already there in the system. It's already there. And because public sector banks mostly have this 50 rupees, it's already there in the public sector banks. It's already there for the government in some form or the other. Maybe the banks can raise some capital and so on, but mota, as they say, that is a thing. So the notion that we have to, fresh money will be needed to do this is a bit of an exaggeration, because that money already has to be made. The government already, it's what we call, remember when you did the fiscal policy, contingent liability. This is what is a contingent liability, that government has some explicit debt, but if it owns some assets and those assets go bad, the government is it's a contingent liability. So all that's happening is a contingent liability becomes a real liability. That's all. So now, here is where I think, again, the China-India example is, I think, important to keep in mind for perspective. Okay, so let us say, for example, that there are hypothetical example. Please, I'm not responsible for any numbers, for the accuracy of any numbers I'm going to quote. I don't believe them, I don't know them, I'm making them up as we go along. But supposing we said that if you look at the numbers, let's say 10 lakh crores are stressed assets. Let's say 50% is bad. 5 lakh crores. Remember, 5 lakh crores is, at today's GDP, 3% of GDP. Am I right? It's 1.67. It's about 3% of GDP. So in the worst case scenario, the government will have to, just own up to contingent liabilities of 3% of GDP, and kind of life can really go on. I'm not saying it's a good solution, because we have to think about how this will happen again, how we should restructure the banking system and so on. But mota magnitudes, that is very different for China. China, because the scale of the problem relative to GDP is much bigger, you would think that if everything is comparable, ceteris paribus, as a share of GDP, the amount they may have to put in by the government will be much larger. So I believe this is a big challenge for India. I do think that we have to address it, but I don't think we're in a situation where this is going to make the economy collapse or whatever, because the magnitudes are not as big as in many. Iceland, I said 11 times, that means 1200% of GDP, correct? Something like that. So, but having said that, I think This resolution is the trickiest. I said all of this to make one point. Money is not the big problem here. The problem is the political problem of how do you, a political system is seen to be forgiving debts to the private sector. That's the heart of the problem. Final point, the final reform, of course, is that, I mean, it raises some bigger issues about our banking system in many ways. One, should banks be doing infrastructure lending like they did in the past, or should we have other financing mechanisms like in many other countries? Bond markets provide long-term finance compared to banks. Should that be a solution? Second, do we need a different structure of the banking industry? For example, do we need to consolidate? How? Do we need more private sector participants? How? So all these are questions that I think come up when we think about the broader addressing the challenge of the banking system. So we've made progress on the first R. R3, I think, is less of an issue. I think R2 is the heart of the current issue, but R4 will be the heart of anything if we want to resolve this on a more sustainable basis, going forward. And so this is one way of thinking. But coming back now to teaching this, because I have one more section I want to do. I'll take some questions before I get to that. So I would say that in terms of teaching these things, posing the question, first, comparisons. On the crisis, there's a whole wealth of foreign crises which I think students should know about when we think about India and the Indian situation. The whole contrast and comparison. And here, one of the contrasts and comparison is that, in the run-up, it was very similar to other countries, but why is it very different in the aftermath of these things? So I think there are various ways of organizing the material to make it come alive to students. I would urge you also as teachers, to think about, always try and, if you make it analytical, conceptual, international comparisons, I think the material comes alive much more easily than it would otherwise. So any questions on this? Because I have one last section, very, a gossipy kind of section before we conclude today. The gentleman at the back there.
Sir, what about the problem of moral hazard?
I think that there are, so the question is, what about the problem of moral hazard? Does everyone know what moral hazard is? I know that there are some people who don't know moral hazard, because I didn't know moral hazard for a long period of time. Who doesn't know what moral hazard is? Please feel free to raise your hands. Exactly, yeah, please, exactly. So moral hazard is simply that when you have a set of incentives put in place which make you behave in a way. So just the best example is that if you have insurance, you become more dangerous in your behavior. So if you have, if you have health insurance, you may smoke a little bit more than you otherwise. If you have fire insurance, you'll be less careful about doing the safety things. So that's what's called moral hazard, right? So here the moral hazard operates at many, many levels, right? So for example, one level is, supposing you recapitalize the banks today, right? Then there's the moral hazard is, they made a lot of bad decisions. How do you penalize them for that? What lessons will they take away? Second moral hazard, if you forgive the debts to the private sector, they will behave badly, right? Because
farm loan sector.
And then there's don't get me into trouble, farm loan sector.
It was a deliberate, they did not repay.
Yeah. So I don't have a strong view on that. I cannot have a strong view on that. But but that's one issue. So now, but one answer to that is, no system can eliminate moral hazard. Moral hazard will always be there in systems. The only thing we can do is to try and draw the boundaries better between, because, for example, you have to have deposit insurance in systems which have private sector banks. We've decided that because if you don't have deposit insurance, in a crisis, the run on a bank can be so severe, it can bring down the whole banking system and led to what happened in the 1930s. So you have to have deposit insurance, you face the consequences. All you can do is to try and regulate that better, have better monitoring. Similarly, just government ownership is itself a moral hazard, right? So what do you do with that? But then, if you then say, well, if you could, suppose you said I could privatize the banks, then you would have to have regulation to offset whatever you may do. And then we know, for example, in the United States, that regulation didn't work. You know, it didn't work, and then so they had to do all kinds of things. So no system is perfect. Moral hazard can never be eliminated. All you can do is you can be vigilant, and this is like, you know, ongoing, you know, the authorities have to be vigilant, they have to have proper regulatory systems, and both to avoid crises and in the aftermath of crises.
And what Raghuram said, AQR.
It will go 5 hours, regulation in between.
Regulation, okay. Yeah, exactly. If you come to that kind, we have to have good regulation as well, absolutely.
Raghuram said AQR is very important.
So that's the recognition part, yeah.
Sir, one small clarification. So when you're comparing regarding this non-performing asset both in India as well as China, so as per like your view, which one is like more volatile and like severe? Is it in India or as well as in China, in your view? Because in India it's more in the private sector as you.
And as I said, firstly, magnitudes are different. So that changes. Second, you know, one is public sector, one is private sector. But then you have a third contrast. In India, it's much more concentrated now, maybe than it is in China. So all these are, you know, just different things which have to be dealt with differently. Well, certainly the fact that magnitudes are bigger in China does mean that it is a bigger problem in China to that extent.
Yeah, continuing to China problem, that is, in our case, you said that it's around 3% of GDP that one-off fiscal deficit rise and you can address the problem. In case of China, it could be around 8 to 10% of the GDP, but their public debt as a share of GDP is pretty lower compared to us, around 20-25%.
Yeah, you know, actually, see, the thing is that, so that 20% number is no longer the right number, because they have, if you look at the consolidated debt, government and local government bodies, it's much higher.
Okay, so still, I mean...
Both could be finally both could be manageable in that sense, yeah.
Yeah. But still, they will need to have around 8 to 10% of GDP, let's say, as a fiscal deficit at one or spread over. So it will probably disrupt the bond market across world, or they will use their foreign exchange reserve.
Yeah. See, China doesn't borrow. See, that's the advantage of having a closed capital account. They don't borrow, and therefore they could probably raise the money financing domestically. So in that sense, there'll be less disruption.
Saving rates are
pretty high. Exactly. Yeah. Exactly.
Can I?
Yeah. Please. Yeah.
So, can we have two straightforward takeaways from the genesis of this problem?
Yeah.
One, if the public sector banks should have diversified their risk portfolio, the problem, the extent of the problem should not have been that serious. Two, if the PPP mechanism, implementation mechanism would have been better, the problem, the seriousness of the problem should not have been that much.
Two takeaways. Public sector banks should have diversified. PPP projects should have worked better. So, you see, it's easy for us to. I would say my takeaways would be a little bit different. Yeah, my takeaways would be that one, not that public sector banks should have necessarily diversified, but the financing of infrastructure itself should have been diversified. Public, private, bond markets, much more diversification. I think that would have helped. PPP, I think, is a very, very complicated issue. And I'll tell you why. Just because I'll give you, when I talk about how the political system finds it very difficult to deal with writing down loans to the private sector, the same thing happens with PPP contracts. Because remember, PPP contracts, often things change and they have to be renegotiated. They have to be. It's in the nature of things that if you have long contracts, things change, you have to renegotiate them. But the same problem that afflicts the writing down of loans also is going to afflict the renegotiation of PPP contracts, because you will always be open to the criticism that you gave someone a sweetheart deal on this. Say some long-term power contract. Yeah, please. Yeah.
I just wanted to find out, because you mentioned in the economic survey it was written there is 7 lakhs crores of rupees. 10 business houses had incurred debt of 7 lakhs crores of rupees. So you mean to say that all these rupees, there is no problem for dealing with closing down such the entire loan? That is one question.
No. So as I said, I think the fact of that could make it more difficult, because if there are these big business houses and you have to write down their debt, it might make it more difficult politically rather than less difficult.
No, you mean to say that there is no problem to just to write off the entire amount?
I'm saying that there is a problem.
Why are we calling this Vijay Mallya, making it as a big issue for calling back Vijay Mallya?
No, I said it is a problem writing down these loans to these companies. It's not a problem. It is a problem.
And secondly, I just wanted to find out this NPAs. You were mentioning about NPAs were improved because of the economy was doing well.
That was in 2002. Yeah.
But then at the first place, what was the reason for that NPAs? It was almost 23%.
Yeah, because see, that partly was the question that was asked here. In the late 90s, growth started to slow down, and a similar thing happened, that as growth started slowing down, the profitability of the companies came down, and they were not able to repay the banks as well, and that happened. So there was one more point I wanted that I should say, just so that all of you know clearly. What happened? There was another reason why we were able to solve that 2002 problem easier than today. At that point, interest rates were very high, 13, 14, 15%. And banks had a lot of government securities. Because SLR was much higher then, banks had a lot. From 13%, interest rates came down, I think, quite a bit. As they started coming down, the bond holdings that they had, their value went up, and they could book these as profits, and so the profitability of the banks improved as a result of that as well. So in the run-up, it was slow growth, but then we were able to solve it better, because then growth revived again, and banks had a lot of these it's basically investments that were not credit-related investments. Their value went up, and their profitability increased, and that brought down the NPAs as well.
Since we have been doing the crisis, and it's I think not very proper to just discuss the twin balance sheet problem for the current contemporary crisis or impending crisis in the case of India. What I wanted to say, that in a financialized market economy, is it possible to completely avoid cyclical crisis of this kind? Because at least history has shown that these crises are not just periodic, they are frequent, and they are cyclical in nature. That is number one. And number two, that I would like to ask, in continuation of what has been asked, is that the moment we say that writing off bad debts becomes a solution to move on a growth path, forget the moral hazard question. What are the lessons that we would be giving in terms of an economy that is a growth-oriented?
Remember, we said in advance that you would have assessments. You have asked the perfect question for an assessment, I think. This is the question I would pose to all of you in the assessment. What is the right way forward, moral hazard or not? What should we do? And I think it's a question that I would like you to think about. I would like your students to think about. I think it's a very good question. So,
do we have a case, the international side, where something like this writing off has been done at a large scale? So we can learn from that?
Yeah. In the US, in Sweden after the housing crisis, in East Asia. I mean, it necessarily involves huge amount of write-downs as well. Otherwise, you're just saddled with these things and they don't go away. Now, I want to make it come alive. What are the successful and unsuccessful central banking experiences? I'm going to tell you who gets an A+ for the best central banker ever. Okay, so we've studied monetary policy, we've studied financial crises, right? Central banks are meant to manage both of these. So I've drawn the first two columns. How successful have they been in the run-up, i.e. either in preventing high inflation or in preventing a crisis, and how successful they've been in the cleanup. So the way I like to put it is that, are there cock-ups in the run-ups or in the cleanups? So where do we make mistakes and that? So one huge success, of course, was Alan Greenspan. In the late 1990s, the US economy was really picking up steam, Most central bankers would have raised interest rates there. And, but he said, look, there is something very special about this going on. It's actually a huge productivity increase, not demand increase, and he didn't raise interest rates, and he turned out he was right. So that is a great example of in the run-up. In this case, he avoided a massive squeeze by not raising interest rates. But then the same Alan Greenspan, of course, less successful, as many of you have said, in the run-up to the housing bubble. Maybe lots of people think he should have acted more vigilantly, paid more attention to this. No, there's again a big mistake. So in terms of the cleanup, that first column should say success, not less success. A+ in my thing for the greatest central banker ever was Paul Volcker. He was brought in when inflation was high in 1980 or 1981. He raised, at that time, of course, in advanced economies, interest rates were upwards of 15%. He came in and he brutally tightened the economy by raising interest rates and brought down inflation in a very short span of time. Now, that is a decision that was so unpopular, inflicted so much cost, that it required someone of enormous courage to do that. I think, see, it's easy, this Greenspan mistake or success of not raising interest rates is actually relatively easy, but to actually squeeze the economy hard, and unemployment for a year was very, very high. It was related to the actions that the Fed took. Of course, what happened, of course, was that luckily, because it was credible, because it was swift, the economy did go into a recession, but afterwards, I think it recovered very quickly, and then it was followed by a long boom. So I think that action was extremely successful. I think the same thing, Mario Draghi, in 2012, European economy was in a funk. All these things were not working, and of course he said, I will do whatever it takes, and then the European economy has picked up. In fact, in 2009, the European central banker did exactly the opposite of what Alan Greenspan. He tightened, thinking that inflation was the bigger problem, when in fact it was growth that was the problem. And in 2009 he tightened, so that was a case of a less successful response. Japan, the failure to clean up the banking system, I think, led to nearly 2 decades of lost growth. So there too successive, this, of course, all banking problems are a combination of both what central banks do and what governments do. And I think, so in the Indian case, I think the high inflation episode was an instance where we had, I think maybe 5, 6, 7 years of double-digit inflation was, I think, a problem. Of course, again, in this case, it was not just the RBI that was meant to deal with it, also, government, fiscal deficits, commodity prices. But of course, you know, a Volcker would have said, I don't care, I will just squeeze the economy. Whether it could have been done in India or not is, of course, a very open question. I think that we had success in both Governor Subba Rao and Raghuram Rajan had great success, I think, in the 2013 episode. I think that a combination of what Governor Subba Rao suggested, which is to increase interest rates on FCNR loans, and then that was proposed by him, and then Raghu took over. I think a combination of his communication, his stature, plus these actions ensured that the 2013 crisis actually was maybe worse could have happened, and that was prevented. But in my book, central banks should be judged or assessed both in terms of prevention and in terms of what they do afterwards. They should be judged both in terms of, in both cases, whether they achieve stable inflation and whether they avoid financial crises or not. And I think that the experience around the world is very rich, you know, offering all kinds of lessons for all of us to take away. But you know, in some ways, the most difficult decisions are the ones where you have to inflict costs on the economy to achieve something. So there are no free lunches in this business. I think that's why these are all tough decisions. You know, but the point is that one learns a lot, and I think students too should learn a lot by you know, reading. So for example, I think that, you know, in terms of reading material, I think it would be great to actually read the stories written about these central bankers as well. I think Governor Subba Rao's book is probably, I mean, well worth reading. There's a book on Alan Greenspan, which is well worth reading. So, you know, how these decisions are made, why these decisions are made, what is the underlying economic analysis, the underlying political analysis. Okay, thank you very much. See you tomorrow.